welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the key headlines from the startup space and Shruti joins us as well. Wekmacon Technologies, a deep tech electric mobility solutions provider, backs $18 million in a Series A funding round led by Ecosystem Integrity Fund with participation from Avishkar Capital. The fresh investment will be used to expand its market presence and enable its solutions to power more than 1 lakh vehicles on roads.
Sunlayan Technologies, an aerospace and defense startup, has secured 186 crore rupees in its latest round of Series A funding, which was led by Jungle Ventures with participation from existing investors Gemba Capital, Singularity Ventures and new investor Shastra VC. With the fresh funding, it plans to increase its engineering headcount 5-fold in the next 6 months.
Roomstory.ai, an AI-powered shopping assistant, has raised 3 crore rupees in a pre-seed round led by Rukam Sitara Fund. The company will use the raised capital to enhance its AI capabilities, launch its website and mobile applications.
Ride-hailing app Rapido plans to take on Swiggy and Zomato, set to launch food delivery pilot in Bengaluru by the end of this month and begins onboarding restaurants.
And Gemini, a crypto exchange run by billionaire twins Tyler and Cameron Winklevoss, has confidentially filed for an initial public offering in the US. Gemini, which operates a trading platform enabling investors to buy, sell and store more than 70 crypto tokens, said it has not yet determined the size or the proposed price range for its offering.
Those were the headlines that we're tracking for you this evening. But on what's brewing today, the Maharashtra FDA has issued a notice to a Blinkit dark store in Pune to cease operations after it found the dark store to be operating without a license. A Maharashtra FDA official told CNBC-TV18 that the dark store located near Midcoin College in Balewadi had applied for a license under the Food Safety and Standards Act 2006, but started operations before the license was granted. Now, the Joint Commissioner for Food has now directed the operator of the dark store to shut down until a license is officially granted and has warned of legal action if this direction is violated. This comes just a week after the FDA suspended the license of a Zepto dark store in Mumbai's Dharavi over poor hygiene and directed all food safety officers in the state to step up inspections to ensure compliance with food safety norms.
And staying with the food delivery space, ride-hailing platform Rapido is gearing up to enter India's online food delivery arena with significantly lower commission rates. Those are even lower than the rates set by current players like Swiggy and Zomato. Shilpa Ranipeta has been tracking that story for us and joins us now. Shilpa, tell us, how is this going to impact customers and really shake up the competitive landscape in this space?
Well, yes, it has started onboarding restaurants in Bengaluru as Rapido is looking at launching a food delivery pilot, which is likely to happen by the end of this month or the beginning of next month. Now, what we're given to understand is that it has been in talks with restaurants, and what it is trying to do is offer a flat rate as against like a percentage commission charge, where it is offering a flat rate of about 25 rupees on orders of 400 rupees or more and 50 rupees flat rate for orders that are above 400. Now, this works out to a commission of about 8 to 15%. Compare that to what Swiggy and Zomato charge, which is anywhere between 15 to 31%. Now, let me tell you why this is actually very interesting. Now, the food delivery space has been a duopoly for many years. From Uber Eats to Food Panda or even ONDC, no player has managed to make a dent or take a considerable market share away from Swiggy or Zomato. And same was the case parallelly with the ride-hailing market with Uber and Ola. But Rapido has been one player that managed to break that duopoly. It garnered a 14 to 18% share in cab hailing, 33% in autos. Now it is trying to do the same thing in food delivery, and it is doing that so by starting off with offering restaurants a lower rate to bring them on and give them another alternative as against Swiggy and Zomato, especially at a time where there's been growing resistance and complaints from restaurants over alleged hidden charges by the likes of Swiggy and Zomato. And it already has a ready bike taxi fleet also. So it will be, while it is still very early, it will be very interesting to see what Rapido does to even draw consumers also away from Swiggy and Zomato and give them another alternative, and if it can actually make a dent in India's food delivery space that has so far been a duopoly. Back to you.
Well, thank you, Shilpa, for all those details. Appreciate you joining us. Moving on, digital wealth platform SYFE has closed its Series C funding round at $80 million. Now, this includes a fresh Series C2 equity raise of $53 million, adding to the Series C1 raise of $27 million in August last year. With over $10 billion in assets under management and a customer base across Singapore, Hong Kong and Australia, SYFE is now doubling down on its India Tech Hub in Gurugram. Founder and CEO Dhruv Arora joins me now to break down the big bet on AI and what sets SYFE apart in a crowded wealth tech landscape. Dhruv, welcome to Startup Street. Now, with $80 million raised in Series C funding, taking your total capital raise to $130 million till date, tell us what is SYFE's current valuation and how do you plan to allocate the new funds raised?
Yeah, firstly, thanks for having me on the show. It's a great privilege to meet again and talk about the latest fundraise. As far as the business goes, we don't publicly disclose our valuation, but what I can share with you is that there's been a significant tick up both since the last round in both the valuation as well as the share price. Now, to your second question about where the assets where does the fundraise actually get allocated, we had announced last year that our core business, which runs out of Singapore, is actually already profitable. So a big part of this fundraise will actually go for regional expansion with specific focus both in Hong Kong and Australia. As you might know, last month, we successfully completed the acquisition of a listed platform called Self-Wealth, which is one of the largest, discount brokers out in Australia. And one of the big focuses for us would be to do some of the good things we've done in Singapore across the whole gamut of wealth management and increase the offering at Self-Wealth outside brokerage and make it a lot more holistic. So regional expansion, growth would be the key focus for us for the latest fundraise.
All right, and apart from expansion, I believe SYFE's India team has grown by 15% since last year, and a key portion of the funds will be exclusively leveraged to expand SYFE's engineering and product teams at its tech headquarters in Gurgaon. Dhruv, what kind of talent are you looking to hire as you scale your tech and product stack?
Yeah, that's a great question, right? So I think for us, India has always been a very core part of the business. In fact, even when we launched the business in 2019, on day one, we had two offices. One was in Singapore and one was, in India, which was the engineering headquarters. And that's why actually when COVID happened, it was, we were already working remotely. So it was an easy transition. But to your question, we are a fintech platform. And I would say tech is more than fin in some ways, because two-thirds of our strength as it stands is within engineering and in product. So I think for us the focus would be to, of course, increase the headcount. We expect about a 40% increase in headcount in the next 12 to 18 months. But I think one thing that we would really want to do is be quite selective with the talent that comes on board. So we are not here trying to build 1,000-person, 2,000-person team, but a very high quality team which might end up at 100, 150 people. And I think that's the kind of talent that we would require, given we are dealing with money now in billions of dollars, right? So trust, security, quality of the product is table stakes for what we are building.
All right. And, you mentioned tech. In fact, you're betting big on AI-assisted tools to enhance both internal operations and customer experiences. So tell us what's unique about your AI offerings and how are they redefining wealth management?
Yeah, that's such an interesting point, right? So maybe I'll break it up into what's happening internally and what's happening externally. I think internally, very evidently, it's leading to a much higher product delivery velocity. As a young company, if you say product velocity is probably our only moat, right? That's the only way we can somehow compete with the incumbents. So whether it's delivery of code, checking of code, or even something like design iterations, the speed of the way it happens and the pace at which it's happening, I think that has already improved. I still think we are just seeing the early sides of it. But what I expect to happen over the next couple of years is that each one of our, ciphers, as we call them, will become a lot more efficient in what they do, right? So internally, I think the key push is going to be on speed and iteration. Externally, actually, it's a lot more fascinating because that's something that impacts the end consumers. One thing that we've already started doing is, we focus a lot on education. And even 2 years ago, if we have hundreds of thousands of users, they would get one market wrap. This is what happened in the market overnight. Now, whether they had Apple stock or not, they would hear about what happened in Apple stock. Okay. Now, thanks to LLMs, you can actually get personalized to your portfolio. So you might not have Apple at all, and that news is irrelevant to you, whatever happens.
Sure.
But what you have, that personalization, which almost leads to digital advice, I think that is where AI is going to play a big role, and it already is in its infancy. So that's an area we'll keep on doubling down over the next coming years.
All right. You've seen strong growth in Hong Kong. And like you mentioned earlier, you recently acquired Self-Wealth in Australia. What synergies are you unlocking in these markets? And what is the kind of impact you hope to make going forward?
Yeah, so, we've had a very developed market strategy. So we started here in Singapore in 2019. And the kind of user we go is what we call the mass affluent user. So these users typically have anything between few $100,000 to a few $1 million of investable assets. Now, these users can't be catered by your conventional private banks, right? I mean, the fact is that it's not attractive enough to a private bank. So the only way this segment can be catered is digitally. And these three markets actually become quite interesting because almost 1 out of 2 adults fall into this, mass affluent segment. So that's why I think when we went to Hong Kong and now, of course, with Australia, now we've done something good in Singapore. We roughly count about 8% of all adults in Singapore are on the SYFE platform. And the goal would be that amount of product innovation, that amount of product localization, what we've done in Singapore. We'll do the same thing in Hong Kong and in Australia. A lot of focus will be on the pension and retirement products. And essentially, you have this gamut of a holistic wealth manager across these markets.
Well, on that note, it's time for me to wrap up our conversation. But Dhruv, many thanks for joining us on Startup Street, and wish you all the best for all your aggressive growth plans.
Thank you so much for having me.
All right, we're going to move on to the hot seat today, where Unbound, that helps enterprises adopt generative AI tools securely and responsibly across their organizations, has raised $4 million in a seed funding round that was led by Raise Capital, along with participation from Wayfinder Ventures, Y Combinator, and others. The proceeds are going to be deployed for hiring and growth in India, for expanding integrations across the AI ecosystem, for deepening model routing capabilities, and so on. So on that note, let me invite the co-founder and CEO of the company, Rajaram Srinivasan, to tell us more about their growth plans ahead. Rajaram, thanks very much for your time here on Startup Street today. You've previously, I was reading, led data security products at Palo Alto Networks and other companies as well. Now you're building Unbound to help organizations roll out AI on their own terms. Very briefly, tell us the kind of experience you're bringing into this and the kind of security gaps you're really solving for.
Great. Thanks for having me here, Ritu. Very happy to be here. And so it essentially comes down to the problem statement, right? Like, so what we are solving for today hasn't been more clearly validated from before. So I was doing data security at Palo Alto Networks for SaaS tools like Google Drive, Dropbox, and so on. And then we saw a time where ChatGPT got up to the kind of usage and proportion that it came up to with, right? Like 100 million users in a record matter of time. Then it came to me that, hey, if security for SaaS is going to be this big, like how big security for AI tooling would be. And very similar use cases, right? Like people are going to be sharing sensitive information. People are going to be using it all over the place with respect to whatever use cases that they want to achieve, from personal all the way up to asking for summarization on board meeting notes. So that's really what got us to starting Unbound, and the validation couldn't have been any clearer from then on, right? For example, let's say I'm a smart software engineer that is looking to use AI to code today. I'm constantly sharing hundreds of files of source code with AI tools, wherein I have to give context. I have to make sure that I'm sharing company secrets in a way of getting more information back from the AI.
Yeah.
Previously, internet used to be one way, right? Like, so you just consume what you saw. Now you are having a two-way interaction. That means you're actively sharing more information with it. And that makes it all the more important that what we're building at Unbound.
Yeah. Well, no doubt, and security is paramount, and that's perhaps why enterprises are trusting you with that kind of data and secrets. But would you be able to quantify the size of the opportunity for this product you're building? And in the very short span of time since you started, how many clients do you already have, and at what pace are revenues growing?
Absolutely. So AI governance as a market, it's brand new territory, right? Like it's gone from zero to almost $900 million in market size as of now. And it's continuing to grow at about 45% to 50% year over year. So that's a humongous opportunity that has just been created. So just within the short amount of time that we have been online for, we have over more than a handful of large enterprises that are trusting us with their security needs. We have over 500 plus users that are on the platform. Each of these are like mid-market startup kind of companies that are looking to use us as the governance platform of choice for AI, from all different AI tools, from cursor, coding tools, and all the way up to document platforms, to chat interfaces, everything. And we do that today. In terms of growth, we are looking at least a 3x growth from for this year, and it's just going to be compounding from then on.
All right. Let's get to that $4 million funding then, and how exactly you're going to deploy that.
Exactly. So as a startup, our primary focus is the product and R&D, right? Like, so we're going to be spending a lot of money in enhancing the product, making it robust so that enterprises can trust us with the product that it is. So a lot of it will go into R&D. Some of it will go into go-to-market efforts as well. We are deploying a significant portion of the capital in India, particularly because we have strong networks and ties there to be able to hire the very best. Like, our bar for hiring is top notch, and we're so proud of the engineers that have been able to help us with the product. So we are actively hiring both in Bangalore and in the US as well, both across R&D and go-to-market teams. That's how we plan to deploy the capital in the coming years.
All right. And I understand you're also looking to deploy about $1 million of capital in India. What are the plans here? How big are the operations, and how much are you expecting to grow them?
That's correct. So we have a significant presence in Bangalore. So we follow the hub and spoke model. So it's pretty much like San Francisco and Bangalore are our only hubs within Unbound. So we have a team of about 8 members there in Bangalore, and we're looking to expand that significantly. And as with AI companies, you don't need to have like hundreds of employees to get to where you want it to be. So we are expanding, but pretty cautiously, in the sense of we would expect about 50% growth in the Bangalore team in the coming weeks and months to come. That's what we're looking at.
All right, that's a sharp growth you're expecting, but I suppose the base itself is, small. But Rajaram, finally, going ahead, to just sum up your vision, what do you think will be the most interesting newer use cases that are emerging for the kind of security work you provide, and the markets that will provide you that avenue for supersized growth going ahead?
Indeed. So we are seeing traction. AI is something that's been changing ground day in and day out. Like, what was a problem 3 months ago is the problem itself has shifted, right? Like, so we're seeing a lot of growth in areas like MCPs and agents. Agents are like LLM just doing the task for you. It used to be like you ask a question and then LLM comes and helps you with something and so on. Now, when you connect agents and make it like pretty much autonomous, right? It'll make phone calls for you. It'll go write a documentation back over to you. It'll run a code, troubleshoot it, and then like be like, oh, this is the issue that I found, and then go solve for it and so on. That's how powerful agents get. So agentic security becomes very important in that area as well. So as the ground keeps shifting, the security underlying implications also have been shifting quite significantly. Those are all interesting areas that we are excited to move ahead with.
Well, we hope security keeps a few steps ahead of the kind of cyber issues that are emerging. But on that note, that's all the time we had. Thanks very much for giving us your time and for speaking to us here. It was a pleasure. Thank you.
Thanks a lot for having us, Ritu.
On that note, it is time for us to head into a short break. But coming up next, fintech player Loantap raises 74 crore rupees and is doubling down on MSME-focused supply chain financing. We put the co-founder on the hot seat to discuss growth plans, path to profitability, and more. Stay tuned. Welcome back. You're still with us on Startup Street. With a fresh 74 crore rupees in the bank, fintech player Loantap is doubling down on MSME-focused supply chain financing. Backed by July Ventures, 314 Capital and others, the company plans to scale its reach to over 2 lakh retailers and fund 1 million invoices over the next year. As India's small business credit gap touches 33 lakh crore rupees, can tech-led lending engines redefine credit access for India's Kirana economy? Joining us now to discuss this further is Satyam Kumar, the co-founder and CEO of Loantap. Satyam, thank you so much for taking time out and being here with us on Startup Street. You know, you have closed this round of 74 crore rupees. How critical is this funding to scaling your supply chain financing ambitions, especially for small retailers? Take us through what's new on the anvil to drive the next phase of MSME empowerment.
So sometime about 8 to 10 quarters back, we started our journey from being a general retail loan focused company to very specific to an MSME, and within that MSME, we went down to supply chain financing, which was doubling down of our energy in this segment. So this was a transition, and there's a mandate to that transition in terms of we successfully transitioning into invoice financing and a supply chain financing entity. So from that point of view, extremely important as a mandate from the investor community and overall ecosystem point of view. As far as the business itself is concerned, so we have been supporting a significant part of almost we supported last financial year about 600 odd crore of transactions on supply chain finance side, and
Sure.
From that point of view, it just allows us to just move that to almost a 2x in terms of the size of the volume that we intend to trade on the platform. But yeah, I mean it's more of a mandate in transition.
Right. And also, you know, Loantap has disbursed over 1,000 crore rupees across 4.5 lakh invoices, right? How do you plan to hit 1 million invoices in the next 12 months as well as reach 2 lakh retailers? If you could elaborate on these plans for us.
So if you look at the overall, the extreme smaller end of the MSMEs, which is the grocery store, mom and pop store is what we call it popularly, and retail stores like a farmer stores and all, provision stores. There is a plethora of them across India, and in a way they are very well integrated to the original OEM or manufacturer distributor to the retail outlet system, and our technology allows us to capture this invoice inputs and all on the go. So that's what we do as far as the platform is concerned. If you look at even one single platform structure or one single ERP structure, they capture more than 90,000 crore of a transaction in one retail system. So from that point of view, this ecosystem has just started opening up, where we are calling it unbundling of credit from a distributor-led credit to NBFC led or a fintech led credit, and that has started. So from the segment size point of view, it's a huge, and what Bikri allows is to rate a retailer on the basis of business confidence. So what is the confidence which a distributor shows in the retailer, or what is the confidence that a lender
Sure.
can replicate in the retailer in terms of the
Sure.
transaction size and
Yeah. Also, you know, like you mentioned,
so that's
Loantap is...
that's
as you mentioned, Loantap is targeting India's distributor-led small retailer ecosystem, right? And there's a focus especially on verticals like grocery and pharmacy. Why are these segments particularly ripe for disruption through invoice financing?
So from the segment point of view, please understand these are the segments which were the only segment which was open during COVID happened. So we call many of the businesses now COVID tested business. So that's a kind of stuff which forms a part of the essential goods, and particularly if you look at groceries, they also develop as a chain for the farmers. So a lot of farmer produce organizations tie up with these chains to make the product available directly farm to folk kind of an ecosystem. From that point of view, the significance is huge. And if we look at the overall MSME ecosystem, there's also the segment which is outside GST. Most of them are outside GST. They are not even qualified lakh plus kind of a annualized turnover point of view. So the traditional rating engines which has been developed by the larger banking system and all misses out on rating or assessing this kind of a loans or this kind of a customers. So if you look at it's extremely important both from the primary credit penetration or a credit enablement point of view, and the other set of data on the platform has shown us over the period of last 10-12 quarters is that the impact of credit is almost 35 to 36% in terms of the increasing sales per retailer.
All right. And you closed FY24 with 67.5 crore rupees in revenues with a net loss of 12.7 crore rupees. How has FY25 been for the firm and where do you hope to end this year? What's the path to profitability looking like, and how do you plan to grow the loan book as well?
So from the business point of view, the technology business has been a bit of positive. And you saw in 24 also, some of the losses came as the portfolios has been based on the regulatory guidelines. Portfolio needed a bit of reschedulement, restructurings and all, which we picked up early stage in the balance sheet. So from that point of view, as a business remains a bit of positive, and we are now looking forward to add overall to the net worth quarter on quarter from the second quarter of the current financial years. So that's fundamentally creating a stable business, creating more capital internally so that you can leverage it for onboard lending.
And what about the loan book? By how much do you plan to grow the loan book?
So our loan disbursement on the platform this year will grow by 60%. Last year growth was almost 80-85%. This year it will grow on a higher base. It will grow by about 60%. So we are looking forward to disburse more than 900 crores on the current financial years. So that's a significant growth as far as the AUM itself is concerned. So the AUM will remain in the range of about 750 odd crore for the current financial year, which is again a growth of almost 45%.
All right, Satyam. Thank you so much for taking time out and being here with us on Startup Street.
Thank you very much.
Okay, on that note, we're going to wrap up this edition of Startup Street. Thanks very much for tuning in, but stay with us. More news and updates will continue on the other side.